George Osborne will unveil his penultimate budget before the 2015 general election with a strong recovery underway. His reputation for economic management riding high, and yet with the Tories still lagging in the opinion polls. Rectifying this deficit is his greatest challenge in the budget. He's got his work cut out. In many ways, the Chancellor will have lots of pleasant announcements to make. Most importantly, while the backdrop to last year's budget was the depth of economic gloom, the news has been good ever since. Economic growth has far exceeded last year's forecasts, and Mr Osborne will announce further big upgrades to economic expectations. While growth in 2013 was thought last March to be 0.6%, the latest data says 1.7%, and the Bank of England expects this to be revised higher to 1.9%. Similar upward revisions are expected for 2014 and 2015. Many forecasters, including the bank, are expecting the economy to be more than 3% bigger this year than last. Even though trade has remained stubbornly weak, the first signs of a rebalancing of growth away from consumption and towards investment is also evident in the data. Expect the Chancellor to stress these developments. With faster growth comes lower borrowing. At the height of the crisis, the government borrowed over £160 billion in 1 year, a figure that initially improved rapidly, but then stalled at the end of 2011. Most recently, borrowing has started to come down again, with the deficit in line to hit the Office for Budget Responsibility's forecast of £111 billion this year, or maybe even do better. But it's not all good news. The Chancellor should be concerned that borrowing in 2013-14 is only falling a little faster than forecast a year ago, even though growth has been much higher than expected. Tax revenues are not as strong as he might have hoped. But his greatest problem is that the scope for rapid growth being forecast well into the future is diminishing as unemployment has come down faster than expected, and indicators of the economic cycle no longer say the economy is unusually depressed. If things are getting back to normal, how can the OBR forecast much faster than normal growth into the distant future? It suggests more of the deficit will have to be closed by further spending cuts and tax increases in the next Parliament. If those difficult decisions are taken after 2015, they'll come on top of austerity already planned to run until 2018-19, with less than half of the planned budgetary tightening already implemented. There's always some scope for some giveaways in a budget, raising the personal allowance in income tax again, for example, or providing more tax incentives for investment and exports. But don't get distracted by the gimmicks and small giveaways. The big picture on Budget Day remains the terrible public finances. The recovery might be here, but it's not banished Britain's deficit blues.